Hello, everyone. This is Tom Fox back for another episode. And you're in for a treat today because I'm in for a treat today. We have someone who I've wanted on the pod for quite some time. He finally got into a place where he could come on and chat with us, and it's Greg Shultz. Greg, first of all, welcome. And thank you so much for taking the time to visit with me today.
Thanks, Tom. I've been looking forward to it as well.
Greg, could you tell us about your professional background?
Sure, absolutely. So I started off in an investigation space, doing internal fraud investigations, and then moved up to the United Nations, New York City, working on large scale investigations. And from there, I transported over to what at the time was the new FCPA thing. And went over to Deloitte to help them with both FCPA investigations as well as proactive compliance program build outs. From there, I went over to Morgan Stanley in Hong Kong. I went on the back end of the Garth Peterson investigation. I was the first employee out in Asia with Morgan Stanley to remediate that investigation and put in that program that was awarded. And I went out to Asia for 2 years, stayed 11. So I lived in between Shanghai, China, where I ran my own anti-bribery consulting business, back to Hong Kong, where I joined BlackRock. I was with BlackRock for about 10 years, first as their head of financial crime compliance for APAC, and then moved over to the global head of anti-corruption compliance with BlackRock to help build out their ABC program globally.
This is going to be the first example of you opening a hole, and we're going down the rabbit trail. You are the first person I have ever met on a podcast who talked about the Garth Peterson investigation. The significance of that matter cannot be overstated in the anti-corruption compliance world. It was the first publicly announced Department of Justice declination. It was a guidepost for compliance professionals literally for years because of the work you and your team did. And the compliance team did proactively before it even got to the point of investigations. So could I just ask you about generally how that matter bubbled up and how you guys investigated, of course, without disclosing any confidential information if you can?
Sure. No, absolutely. I think I wouldn't have been able to do it without the dear leadership of Raja Chatterjee, was our global head of the group at the time, who was subsequently renowned as the best compliance officer in the world following that announcement from the government. But we did a very hard focus in APAC, in particular, our private equity space, and remediated much of our assets across the firm. And we had obviously plenty of resources to do so in the backing from executive management to execute on that. So following the announcement, Morgan Stanley continued to push out their program and hold it to a higher standard than they ever before. It was an incredible experience.
It really could not be overestimated. I think the importance of that investigation and that declination. I remember I had a colleague called Howard, named Howard Sklar, and he may have been one of those who called him the world's greatest chief compliance officer. But nevertheless, it was a guiding post for compliance professionals for years until the Department of Justice formalized. You had the FCPA pilot program, and then formalized that in the FCPA corporate enforcement policy.
Right.
Wow. Like I said, I've never met anyone who's, I think you and I certainly know what BlackRock is, but for any of our listeners who might not know, could you tell us the nature of that company's business?
Sure, absolutely. So BlackRock is the world's largest asset manager and manages over $10 trillion in monies of other people. This is not their money. And what that means is they take on investors to invest in different product lines across different finance suites. So that may be your traditional asset management that comes in from sovereign wealth funds where we manage the money and invest it, or it might be from the private equity side where I spent a lot of my time. That's investing in portfolios across the globe, different industries, different geographies, at very large amounts.
Can you start by maybe explaining how compliance team or compliance function works in the asset business such as BlackRock, of course, in today's regulatory environment?
Sure, absolutely. So the compliance as a whole is a very big team at BlackRock, and it's stretched across the globe. with people located in just about every jurisdiction where we have offices, many with global and regional responsibilities. And the compliance function is broken down into many different vertical channels. The vertical channel that I was in was financial crime compliance, which had oversight for anti money laundering compliance, fraud compliance, sanctions compliance, and then myself, global head of anti corruption compliance. The amount of compliance functions at BlackRock is so large, we would need a couple hours to go through.
So how what I'm intrigued the most about is how does a compliance function either evaluate a potential acquisition or prepare a company for divestiture or manage the compliance function while you own and are running the company?
It's a good question. So the financial crime team specifically, it gets involved in a very detailed due diligence process when looking at potential new acquisitions. And that may be done through outside legal counsel, as well as hiring external due diligence providers to understand the entities that's behind the assets, as well as the individuals that are behind the assets. The actual investment life cycle is quite long. Some may say it's quick, but beyond the legal compliance risks that lay within the investment lifecycle within the private equity business, there are economical DD, there's tax DD, and many other functions that play into the entire investment lifecycle.
So what are some of the key objectives for both compliance team and asset managers to align on a unified approach to compliance?
Yeah. So I think it's important to have an incredibly strong and robust relationship between the investment teams. One of the big things that I've seen over the years, being both at Morgan Stanley as well as BlackRock, is the incredible and rapid growth of private equity investments across the globe, leading investors to have access to investments in industries and geographies that they've never been before. And with the growth of these funds and the territorial reach of these funds, I think it expands the potential regulatory impact on these funds and these portfolio companies. The investment teams, for obvious reasons, want to move quick. They want to make investments. They have to deploy capital for their investors and make returns. But compliance plays a crucial role in that in order to mitigate the risk along the full life cycle of the investment, from day one of targeting a particular portfolio company to exiting a portfolio company. And one of the key words we used at BlackRock was being a trusted advisor. So it was very important for the compliance function to have a relationship with the business that you were seen as a trusted advisor, where they would come to you in compliance for the guidance rather than reaching out to them to move them forward.
How did you maintain or even open communications between the compliance team and the portfolio managers?
Yeah, sometimes very difficult. So we would typically go through the investment teams, the deal acquisition teams, to start these conversations early on about what we wanted to do, we potentially would want to do at the portfolio company and what level of risk profile that we should adhere to as we make the draw out the program. With the help of the investment teams, we would then leverage their relationships with the asset managers as well as the operational staff on the ground at the portfolio companies to help implement the controls that were needed at the portfolio companies.
I often say that compliance is seen as Dr. No from the land of no, although I heard a great phrase today, compliance puts the no in innovation. So how do you keep you use the term trusted advisor, so that's probably our starting point. But how did you try to maintain the relationship so that you weren't seen as the Department of Business Non-Development?
Yeah. Yeah, fair enough. I think often advice that I was given years ago and that I follow for myself is to listen more than speak. I think it's important for compliance officers to understand what the business is trying to do as they are fiduciaries to their clients. They were trying to return ultimate value to the portfolio companies and ultimately up to the funds. It Compliance officers need to spend more time listening than speaking. Oftentimes compliance will not understand how and this is including myself, how a particular portfolio company works. I had no idea how a tollway bridge worked in Mexico until I joined my former employer. So I think partnering with them and showing them your interest in what they're doing is invaluable. I also think opening up multiple channels of communication with the business and creating that close relationship for future work and partnership is imperative.
How about or could you give us some examples where you believe the improved collaboration between compliance and the business units or the portfolio managers led to better outcomes?
Yeah. So we had at one of my former employers, we had an example where we dug down a little bit into the fund documents and found that there was a contractual requirement with a co-investor to put in a compliance program. The business at the time, when they made the investment, hadn't realized this. So I actually went to the business after some long discussions and said, this was in a very high risk jurisdiction. Went to the business and said, put aside all the compliance risk. Just forget everything I've just said. We now have a contractual document with our co-investor that requires us to put in a compliance program to mitigate risk. Very quickly, the compliance program was adopted at the portfolio company, and we were able to spend even more time there to demonstrate to our co-investor what we have done.
Let me change. I'm not sure I'm going to change the subject, but I'm going to change a phrase and I'm going to introduce risk and even risk management because it strikes me that what I just heard from you was yes, we use the word compliance, but we also talked about risk. Here we talked about non contractual performance risk. So, how do you keep the risk part or the risk based component of what a compliance program must do literally in front of the the portfolio companies and the portfolio managers?
Yeah. I think that goes back to making sure that there's open dialogues and communication. One of the things that I found was successful is I had regular catch ups with our global fund heads. These are very senior folks that are in charge of more about strategy rather than the day to day investing. So, although they are at the macro level and they don't want to know what's happening at the portfolio company level, what I tried to demonstrate to them was this is my strategy. This is why I'm doing it. And this is why it can add value to your funds. It's taken a step layer down, the chief investment officers, so the CIOs for each of the funds. These are the people that are making the decisions and ultimately will make the call in the investment committee process. I made sure that I had great relationships with them. Now, sometimes we're not targeting a compliance program at a specific asset. We're taking a risk-based approach across the fund to implement a program to mitigate risk. And then lastly, alongside with the day-to-day investment teams, we would make visits to the portfolio companies to provide monitoring and oversight reviews of the portfolio companies. So I got to travel to some interesting places to look at some of these portfolio companies and how they operate. And I think the feedback that we got was compliance was actually taking passion in the productivity of the portfolio company and therefore the fund and therefore for the investors' monies to protect these assets. And even the people that were on the ground in these local jurisdictions were appreciative that they saw someone that was quote unquote cheering about the portfolio company and making sure that they were doing the right thing.
That really leads to the next area I wanted to explore with you, which is yes, you can do compliance because it's a legal or regulatory requirement. But I maintain that effective compliance equates to more efficient business processes, which equates to more profits. In other words, saying that compliance actually adds value. Is that something that you were able to communicate or that the portfolio companies themselves saw?
Yes. I mean, we were successful in communicating how it added value. I think the biggest question is how can you quantify that and how you put a dollar on that, in particular for your investment teams. So at the portfolio company level, those people are typically the local folks working in the day to day operations. would not have any insight into that. But for the investment team, the chief investment officers that are trying to seek alpha on the back of their funds, they want to see that number, what that cost is. I think what further supported that was investors in their subscription documents that requested compliance programs in place. And maybe these are US based, UK based, where there's bigger, more global territorial reach regulations, programs in place in order to mitigate financial and reputational risk. And then I guess the last piece is I've been in a position where we were selling and our potential buyer was a fund that was bound by the same laws and regulations that we were. So one of the first questions they asked in due diligence was, have you had a compliance program in place? And if so, have those risks been mitigated? And often those are things that you have to sign in the buy-sell agreement. So I think those are definitely items that add value to the portfolio company and ultimately the fund. But being able to quantify that and show that is something that is really on the next level for the investment teams.
I would try to explain to businesses that without a compliance program, they were in danger of not being able to unlock the value of their own organization because no one would invest in them, whether it was private equity or other. A bank wouldn't loan money to them. And I come out of the energy space professionally, companies wouldn't do business with them. And I use the example of in the energy space, there's Chevron, Exxon, and the producers have gold standard compliance programs, but they don't do the work to pull the minerals out. The service companies do. That's Halliburton, Baker Hughes, Weatherford, and everybody works for them,
Mm,
literally down to a $15 million software company that I represented that had one piece of software that did one thing. And I told these guys, if you don't have a compliance program in place, nobody's going to do a deal with you because the way the energy space responded to the first FCPA sweep in the late 2000s or the first decade of this year was to institute compliance program requirements in all contracts.
mm,
And literally after 2 weeks after I convinced them to put a compliance program in place, they were too small to even have their own sales force. So I trained their 4 external reselling agents. One of those service companies came and made a big investment. And the second question they ask is, we want to see your compliance program. And it's exactly like you said, what are your risks and how did you mitigate them? So I was able to show them that. Is that a conversation you still have to have in 2024? Or is that because of so many industry sweeps fairly well known?
I think it is, especially when you're dealing with some of the larger funds in the globe that are based in the US and UK and bound by these laws. Those are definitely conversations that do come up, but also from the investor side, right? A major US pension fund that wants to put $1 billion into an alternative assets fund, they will start off and sometimes require certain compliance requirements in place before they hand over their money. So I think you're seeing it from two different angles, from the early stage in the investment side, as well as the exit side and dealing with sellers. I'm sorry, buyers.
Could you give us an example of a risk-based compliance program that you either were a part of or saw successfully integrated into a portfolio company?
Yeah. Yeah. So I've worked on many different levels of risk, real estate buildings in the UK, which I'm not going to be entirely concerned about versus oil and gas. And since that's kind of fresh, what you just mentioned, oil and gas sitting in Southeast Asia. Going back, I believe I mentioned it earlier that an oil and gas investment in Southeast Asia, we found out that the co-investor had required us to put in a program because we were managing all the operations. So that one was quite easy to get over the line. There were some others where it was a bit more challenging, especially when you're dealing with local parties, local vendors that are not aware of such global regulations that impact these companies, or culturally, it's not accepted.
I used to be able to ask a question along the lines of, where do you think this compliance will be in this space in 2025? I can't do that now because that's next year. So
Mm,
now I get to say, Where do you see the role of compliance evolving to in the alternative asset space in mid-century, 2030? How's that one for you? Where do you see this down the road, Greg?
Yeah. So these the alternative assets space is not getting smaller. They're only getting bigger. And some of the big firms are coming up with what they call super funds. And these super funds are billions and billions of dollars, and they have to deploy rapid capital in tough economic environments like right now and under certain timeframes. I think it's going to be very difficult to get human capital, human compliance capital to mitigate the risk for these funds. I think most of the big funds are their compliance work is being done manually, which is not sustainable. I think companies and firms, investment firms are going to have to look to either outsource their compliance work potentially to an external vendor at the portfolio company level or at the fund level, or in my best bet and hopes, it's technology. I think I have built some technology in the past where we were designing compliance programs for portfolio companies for one specific risk. And I think that needs to widen out because we all know now that the difference in various compliance risks of portfolio companies is quite broad. As these funds get bigger, go into new jurisdictions, go into higher jurisdictions, you're going to have more regulations and more risk. So ultimately, I think it's got to move towards technology.
Let me change the focus from the compliance function to the compliance professional, up to and including a chief compliance officer. What advice might you give someone who wants to be a compliance professional as to maybe the skill set you think they should have or use in that role?
I think this goes back to my earlier comment about being able to listen more. And I often say listen again, then advise, because you have to be able to demonstrate to the business that you are a partner. I think that's a skill set you have to have. You have to be able to connect with people. I was fortunate enough to be in a position where I could travel a bit and meet my investment teams in person to understand that the person on the screen is not necessarily the person you meet in person. And that those relationships were invaluable and those bonds are very, very strong over time. And once they realize that you're trying to help them and you're not trying to play in-house comp, it becomes a great partnership. I think someone wanting to join the space, they want to be inquisitive, they want to be able to listen. Someone who has a background in data analytics, I think is phenomenal at the moment because with these super funds happening, you have data that's sitting across the globe in all these portfolio companies that you have to bring together to mitigate the risk. Very different from over 20 years ago when I started, where data analytics wasn't even a question of what we did in a compliance function. It's become imperative now.
So I taught a compliance class at a law school this summer, and there was half JD types, half MBA types, and one undergrad. A woman who was a business getting a undergrad degree in business process engineering. And I was a little concerned about her in the class. She got the second highest grade. She completely got it. She looked at what I was saying and said, "Oh, this is just a business process. I get that."
Yeah.
And she started asking me about pattern recognition in compliance. So it's a way to introduce if you were advising or had a friend whose son or daughter was in college, perhaps other than data analytics or maybe even law, I have to throw that in because of my background. Might you advise them to study, focus on, or even take an interest in which would prepare them to be a 2030 compliance professional?
I'm seeing a lot of growth, in particular the schools where I went in risk management and operational risk management. I think those areas will be key for potential compliance professionals to understand how business works. And hopefully, if there's a bolt on of an international piece in their studies where they can understand how these companies operate in foreign jurisdictions. I can tell you, when I went to business school, and a lot of people ask me, why aren't you a lawyer and you're going to get your MBA? My operational risk management course, we had to review a operational company, and I was the only one in the entire class that put a line item for expense for risk management and bribery because it was in a high risk jurisdiction. I got the second highest grade. So I was the only person in that class that realized that. So someone who wants to study enterprise risk, international risk, I think would gain sufficient knowledge to help them in a global firm, at least when it comes to compliance.
Greg, you mentioned a company you have formed, Conformitise. I got that right. Could
Yep.
you tell us a little bit about this or where you hope to take it?
Yes. I feel like compliance is becoming compliance and we need to take it to the next level. So I was trying to come up with a name that referenced compliance, hits conform, but also to take in the piece about democratization of compliance. Sometimes compliance becomes, as I say to my former colleagues, becomes a treadmill that's constantly rolling. We need to think about what are the next things that we can do. So Conformitize is how can we democratize compliance to make it on one platform, yet easier to manage and provide oversight. So we are trying to provide consulting services to private equity funds to help with what we have just discussed. We were also looking into developing some technology to help compliance professionals manage their portfolio companies' risk. Because, for example, myself, I cannot be in all 1,000 places where BlackRock owns a portfolio company in the globe. So in order to do that, I only think technology is the way forward in managing those risks. So we are currently looking and meeting with CIOs, data analytics experts, as well as some software engineers to see if we can come up with a solution to help manage that risk.
Greg, unfortunately, now we are at the end of our time for this episode. But before we leave, I wanted to ask you if our listeners wanted to connect with you or find out any more information on your new business venture, what might be the best place or places for them to go?
Sure. At the moment, anyone is more than welcome to reach out to me on LinkedIn. I'm happy to have open conversations and brainstorm ideas. Also, people can email me at gschultz@conformitise.com and I would be in touch.
Greg, I wanted to thank you again for taking the time to visit with me, and I hope we can continue this conversation.
Absolutely. Thanks, Tom.